Major tax deductions and credits for businesses in 2023. In the last video, we talked about tax deductions and credits for individuals. In this follow-up video, we will discuss deductions and credits for businesses. Let's get into it. Introduction. Understanding tax deductions and credits available to your business can help you save significantly on your tax bill. Part 1. Business tax deductions. Tax deductions reduce the amount of business income that is subject to tax. We take a look at 15 popular tax deductions businesses may take. Operating expenses. First up is operating expenses. Business owners can deduct the ordinary, common and accepted in the trade or business, and necessary, helpful and appropriate for the business, operating expenses of running their businesses. Examples include rent, utilities, office supplies, and employee wages. This is the most extensive category of deductions for businesses. It includes all operating expenses incurred in running the business. Business owners must keep meticulous records of all business expenses, no matter the size. Even minor costs like office supplies can add up over a year. I will discuss some of these expenses in a little more detail later in the video. Cost of goods sold, COGS. Number 2 is cost of goods sold. These are direct costs incurred to produce the goods a company sells. This includes raw materials, direct labor, and manufacturing costs. Accurate tracking of COGS is crucial, especially for manufacturers and retailers. It directly impacts your gross profit and can be a red flag for IRS audits if calculated incorrectly. Depreciation. Number 3 is depreciation. Depreciation allows businesses to deduct the cost of business assets over their useful lives. Instead of deducting the entire cost of an asset at once, businesses deduct the cost over several years. The tax code does allow for accelerated depreciation on some assets. This means the cost of these assets can be deducted all at once instead of being spread out over several years. This helps businesses to recover the cost of these assets quicker than if they were depreciated over the usual time allowed by depreciation. Section 179 Deduction. Section 179 of the Tax Code allows businesses to deduct the full purchase price of qualifying equipment and software in the year they are placed in service, up to a certain limit. For 2023, the maximum deduction is $1,160,000, with a phase-out threshold of $2,890,000. Bonus depreciation. Businesses can take an additional 80% deduction for the cost of qualified property acquired and placed in service during the year. Bonus depreciation can be taken for new and used property. Depreciation can be a powerful tool for tax planning. The ability to deduct large purchases immediately through Section 179 or bonus depreciation can significantly reduce taxable income in a given year. As part of a tax planning strategy, businesses can opt to purchase assets as in years where the depreciation would be most beneficial to them. Business vehicle expenses. Next is vehicle expenses. Businesses can deduct the cost of purchasing and operating a vehicle. Businesses can deduct either actual expenses or use a mileage rate allowed by the IRS. If the vehicle is used for personal use, the expenses must be prorated and only the business portion can be deducted. The standard mileage rate is $0.655 per mile for 2023. Business owners should figure out which method will yield the larger deduction and use that one. The standard mileage rate is simpler, but the actual expense method might yield a larger deduction for newer or more expensive vehicles. Bear in mind that the business must use the standard mileage rate the first year the vehicle is used for business in order to use it in subsequent years. Otherwise, the actual expense method must be used. Home office. Business owners are allowed to deduct expenses for the portion of their home used exclusively for business. Expenses are allocated to the business on a pro rata basis, usually using square footage used for the business compared to the total square foot of the home. Expenses such as utilities, insurance, mortgage interest, and property taxes are deductible. A simplified method of $5 per square foot, up to 300 square feet, can be used instead of pro-rating actual expenses. For business home use above 300 square feet, actual expenses must be used. This deduction has become more relevant with the rise of remote work. The simplified method is easier but may result in a smaller deduction than the regular method. Employee benefits. 6 is employee benefits. Benefits provided to employees are deductible. These include 1. Health insurance premiums. 2. Retirement plan contributions. 3. Education assistance programs. 4. Life insurance coverage. Travel expenses. Ordinary and necessary business travel is deductible at a rate of 50% for 2023. Travel expenses include transportation, lodging, and meals. Business owners should keep detailed records, including the business purpose of each trip. Advertising and marketing. Costs for promoting a business are deductible. This category is broad and can include digital marketing, which is increasingly important. Be cautious with items that might be considered entertainment, which is usually not deductible. Insurance premiums. Business insurance expenses are deductible. These include 1. Business liability insurance. 2. Commercial property insurance. 3. Business interruption insurance. Professional fees. Legal, accounting, and consulting fees are deductible. Rent expense. Office space and equipment rentals are deductible. Interest on business loans. Mortgage interest on business property and interest on business credit cards and loans are deductible. Larger businesses have restrictions on deductible interest imposed by recent tax law changes. Taxes. Certain business-related taxes are deductible. These include 1. Property taxes on business assets. 2. Payroll taxes. 3. State and local taxes related to a business. Federal income taxes are not deductible for businesses. Education and training. Costs for improving skills related to your business. 1. Bank fees. Charges for maintaining business accounts and credit cards. Part 2. Business tax credits. Businesses can avail themselves of certain tax credits to reduce their tax bills. Business tax credits come in many different shapes and sizes. There's probably a tax credit for every business. The rules for qualifying can be stringent for some of these credits, so businesses must make sure they're following the rules when claiming these credits. Here are 11 business tax credits. Research and Development, R&D, tax credit. Up to 20% of qualified research expenses can be claimed as a tax credit. Unused amounts can be carried forward or for up to 20 years. Many businesses do not realize that this credit is available. Even if a business is not in a traditional R&D field, it might still qualify if it is developing new products or processes. Work Opportunity Tax Credit, WOTC. This credit is allowed for hiring individuals from certain target groups who face significant barriers to employment, such as veterans, long-term unemployed, and individuals receiving government assistance. The credit is generally 40% of first-year wages up to $6,000, but in some cases may be as high as $9,600 per employee. This credit can provide significant savings while also supporting workforce diversity. However, it requires certification from state workforce agencies. Small Business Healthcare Tax Credit. This credit is available for small employers who provide health insurance coverage to employees. To qualify, businesses must have fewer than 25 full-time equivalent employees, pay average wages of less than $56,000 per year, and cover at least 50% of the employee's health insurance premiums. Employers can deduct up to 50% of premiums paid, 35% for tax-exempt employers. This credit can make offering health insurance more affordable for small businesses, but it has strict eligibility requirements. Disabled Access Credit. This credit is for small businesses that incur expenses to provide access to persons with disabilities. Businesses can deduct 50% of eligible access expenditures that exceed $250 but don't exceed $10,250, for a maximum credit of $5,000. 5. Employer-provided childcare facilities and services credit. Businesses can claim a credit of 25% of qualified childcare facility expenditures, plus 10% of resource and referral expenditures. The credit is limited to $150,000 per tax year. This credit can be a significant benefit for businesses looking to support working parents, but the administrative requirements are complex. New markets tax credit. Businesses can claim a 39% credit over 7 years for investments in community development entities. This credit is designed to stimulate economic growth in low-income communities. It is complex but can provide substantial benefits for qualifying investments. Renewable Energy Investment Tax Credit, ITC. Businesses can claim a credit for solar, wind, and other renewable energy investments. The percentage that can be claimed varies by technology and project start date. This credit aligns financial incentives with environmental goals. The percentage varies, so careful planning is essential to maximize the benefit. Energy Efficient Commercial Buildings Deduction, Section 179D. Businesses can claim a tax credit of up to $1.88 per square foot for energy efficient improvements. This credit can provide significant benefits for new construction or major renovations, but requires certification by a licensed engineer or contractor. Employee Retention Credit. This credit can be claimed by businesses that kept employees on payroll during COVID-19. While this credit has expired, it can still be claimed retroactively. It provided substantial benefits for many businesses during the pandemic. Family and Medical Leave Credit. This credit can be claimed by employers who provide paid family and medical leave to employees. Businesses can claim up to 25% of wages paid during leave. Alternative Fuel Vehicle Refueling Property Credit. This credit is available for installation of electric vehicle charging stations or other alternative fuel equipment. Businesses can claim 30% of costs up to $100,000 per location for installation of charging stations. Important considerations. Eligibility. Each deduction and credit has specific eligibility requirements. Ensure your business qualifies before claiming. Documentation. Maintain thorough records to support all deductions and credits claimed. Tax law changes. Stay informed about potential changes to tax laws that may affect deductions and credits. State-specific benefits. Check your state's tax rules for additional deductions and credits. Timing. Some deductions and credits may be more beneficial if timed strategically across tax years. Alternative minimum tax, AMT. Be aware of how AMT might affect your ability to benefit from certain deductions and credits. Talk with your tax professional to understand this better. Carry forwards and carrybacks. Some unused credits and deductions can be carried forward to future tax years or back to previous years. Complexity. Many business tax deductions and credits have complex rules. Consider consulting with a tax professional to ensure compliance and maximize benefits. Navigating business tax deductions and credits can be complex, but the potential savings make it worthwhile. Businesses should keep detailed records and work with a tax professional to ensure they're maximizing the benefits while remaining compliant with tax laws. Tax laws change frequently, so businesses should stay informed about current regulations and how they apply to specific business situations. Tax strategy should be tailored to unique business circumstances, and regular consultation with a tax professional can help business owners develop a comprehensive tax strategy that goes beyond just claiming available deductions and credits. And that's it for today's video. As always, remember to share, like and subscribe. Until next time.